Hello and welcome back to Smart Money Mondays. I'm Victoria Elias, also known as the Money Coach. Today we'll be looking at personal finance terms that you should know as an investor. First up, we have an asset. What is an asset? The official definition says that an asset is a resource that is expected to generate future economic benefits. But in simple terms, an asset is purely something that you own, something that has been paid up in full. Examples of assets can be money that you have in your bank account, money in cash. It can be a car or a house that you've paid up in full. It can be furniture, basically anything that you've paid up in full. Next up, we will look at a liability. What is a liability? A liability is something that you owe, something that will drain your resources. A liability can also be classified as a debt. Examples of liabilities can be credit card, personal loan, it can be car finance, a mortgage, basically anything that you still owe and that you still need to pay. You would have noted that I've classified a car and a house under both an asset and a liability. A car can be classified as an asset and a liability because it can be bought under a finance contract. That means that you bought a car and the finance house or the bank has entered into a contract with you where you need to make regular payments, let's say for 5 years, and you happen to lose your job in the third year and you missed 3 consecutive payments. That bank or finance house has the right to come and repossess the car or the house because it is still in essence their property. It is something that they own and you still owe it. That is why you cannot classify something like a car or a house that is still under finance as purely an asset. It needs to be classified as both an asset and a liability. Next up, we have gross versus net income. You'll typically see this on your payslip. Gross is what the company owes you or what the company pays you, and net is what gets paid into your bank account at the end of the month. I'm pretty sure you've heard of people mentioning net worth. So your net worth is something that you use to determine whether you're getting richer or poorer. It's a total of all your assets minus the liabilities at the current value. Let's say you've paid off your house and the house has a current value of 2 million, and then you went and took out a personal loan at the bank worth 500,000. You will take your asset worth 2 million, which is the house, less your liability of 500,000, which is the personal loan, and you'll be left with a net worth of 1.5 million rands. Next up, we look at interest. Interest is a fee that a lender, like a bank, will charge you for borrowing your money, or it can be a return that you will receive on your savings or on your investments. Typically, we have simple interest and compound interest. Simple interest is calculated on the principal amount or on your initial loan amount. Compound interest is interest on interest. So it is calculated on your principal or your initial loan or investment amount plus any interest that has accumulated over time. Next up, we look at your credit score. A credit score is a number that tells creditors how much debt you currently have and how you have been handling previous or past debt. It's very important to have a clear credit score or a good credit score because it can impact or affect the rate of interest that lenders will charge you when you're taking out a loan, applying for a car finance, or taking out a mortgage. So it's very important to pay your debts on time and maintain a clear credit score. Next up, we look at cash. What is cash? Cash is real money. It is physical cash, notes and coins. Cash is also low risk and easily accessible. I want us to step a bit into the investment world and look at some investment terms. What is investing? Investing is the action of putting money into an asset type, maybe into an investment account, into shares, into property, and expecting it to earn or generate a profit or income. When looking at investments, you'll often hear the term diversification. Diversification is an investment strategy that helps you manage your risk. You invest in different asset types and classes to lower your risk and seek a higher long-term return. You'll diversify such that if your technology industry is going through a crisis and share prices are dropping, it doesn't necessarily mean that your banking sector is also experiencing the same. So there you'll see that your portfolio is balanced. Some shares might be dipping, the value might be falling, but you'd find in turn that your other shares, maybe in banking, is higher or performing better. That is why you diversify, because you don't want your portfolio value to tank all at the same time. You might need to liquidate your investments at a certain point in time, and if it's at a downturn, you'll actually realize your losses. We also have savings. It is basically the action of putting money away and then using it at a future stage while earning interest or returns. Next up, we look at shares. This is when the capital of a public company is listed on a stock exchange, like the Johannesburg Stock Exchange. That capital is then split into equal pieces and sold. For you to be able to buy these shares, you need to have a broker, like a stockbroker, and then you go through them. There are processes that you need to follow, and that's how you can own a piece of this company by buying shares. When you buy shares, you are then eligible to participate or to share in the profits of this company, and that profit sharing is called dividends. Then what is a shareholder? A shareholder is an individual or a company that owns shares in a public listed company on the stock exchange. One thing that you should know about shareholders is that they have rights. They have rights to attend annual general meetings. When they attend, they may comment on how the business is managed, they may ask questions and things like that. So it's very important to know what your rights are as a shareholder. But again, we will look at those rights in a different session. Next up, we look at property. What is a property? In the context of investment, property is anything that can be sold for a profit. Property can include investment property, a house, a car, basically anything that you can sell to make a profit. Another interesting term is depreciation, right? Depreciation is when an asset decreases in value over time. You often hear that you buy a car today, the moment you drive out of the dealership, the car has lost its value. They are typically referring to depreciation in such an instance. Next up, we look at inflation. What is inflation? Inflation is a term used for the general increase in prices, right? You know that 10 Rand today is not worth the same as 10 Rands 10 years ago. So that difference is called inflation. Inflation affects your buying power. Whatever you can buy now, you won't be able to buy next year with the same amount of money. What affects it is inflation. Finally, we're going to touch on the repo rate and the prime rate. What is the repo rate? The repo rate is the rate at which the Reserve Bank borrows money to commercial banks. So your ABSA, your Standard Bank, your FNB, they borrow money from the Reserve Bank, and the rate, the interest rate that the Reserve Bank charges them is called the repo rate. Then we have the prime rate. It's called the prime lending rate. This is the rate that commercial banks will charge its customers, you and I and other businesses, to borrow money. So if I need money, I go to a bank, I get a loan, that will be called the prime lending rate. Another important thing to note is that the prime rate and the repo rate are linked. If the repo rate goes up, the prime lending rate goes up as well. So they are linked and they move together. But you need to bear in mind that the prime lending rate is applicable or specific to you as an individual. It will depend on your credit score. So it will not be the same for everyone. It varies. So that's all the finance terms that I think are important. Please familiarize yourself with them such that you don't get lost in future sessions. That's all I had for today's session. Thank you for tuning in. I'm Victoria. See you next week, Monday.